The Bank of Canada has raised the interest rate for the first time in almost 4 years, and people are panicking. Well, not exactly, but it's definitely something to be watchful of, since it has been a while since an interest rate hike has happened. So let's take a look at the impact to mortgage holders, which is the majority of the population. And with this latest news, this now begs the question, is now finally the time to switch to a fixed rate mortgage from a variable rate mortgage? Well, we're going to take a look at this, but before we do, please drop a like down below, as it does help out the channel and also lets me know what kind of content you like so I can keep giving you more of that. Also note that I'm not a mortgage specialist, so this is just my opinion, and be sure to consult with your mortgage advisor before making any decisions regarding your mortgage, as it is your livelihood after all. Now with that said, let's get right into it. Now the Bank of Canada recently raised the interest rate to 0.5%, and like I mentioned previously, this is the first time it's been raised since 2018. Now the interest rate back then was at 1.75%, but this was slashed all the way down to 0.25% when the pandemic hit in an effort to boost the economy. Now the Bank of Canada has always hinted that it plans to raise the interest rate, and this should come as no surprise, as it's also engaged in the same fight against inflation that is plaguing the States and pretty much the majority of the world economy. Now, as the world has been moving to recover from the effect of the pandemic shutdown, the Bank of Canada has been keeping an eye on the impact to the economy, and the Bank of Canada feels that now is a good time to initiate the interest rate increases. A major catalyst to this is the latest report on the economy based on the last quarter of 2021, which indicated that Canada's economy grew by 6.7%, which beat analyst projections of 6.5%. But even more importantly, this growth signaled that economic activity was now back to pre-pandemic levels and actually is above those pre-pandemic levels. Now, obviously, this is a strong sign, and it shows that the economy is in a good state to absorb the impact of any interest rate increases. Now, it is clear that this won't be the last interest rate increase. Analysts are projecting as many as 5 more interest rate increases before the end of the year, and I personally would not be surprised if the timing of those increases coincided with interest rate hikes on the American side of the border. Now, the next Fed meeting in the States is scheduled for March 16th, and there's an expectation of a rate increase announcement coming out of that meeting. So we'll just have to monitor the situation closely to see what occurs. Now, coming back to this side of the border, lenders have actually already made changes to their lending rate in reaction to the interest rate increase by the Bank of Canada. Now, the big banks have raised their prime lending rates to about 2.7%, which again is no surprise. Now, another situation to monitor, which will most likely affect how quickly and how often the rates are raised, is the situation over in Eastern Europe between Russia and Ukraine. Now, the invasion of Ukraine by Russia has resulted in an increase in the price of many commodities that are usually imported from Russia. Now, when you combine that with the fact that Canada is no longer importing oil from Russia, this has especially resulted in a spike in oil prices. Now, this in turn drives up the price for oil that consumers and businesses need, which in turn contributes to inflation. And since we were already in a high inflationary environment to begin with before all this started, well, you get the picture. Needless to say that combating inflation is high on the list of priorities as far as the economy is concerned. And raising the interest rate swiftly and aggressively is the option on the table that's ready to be implemented without hesitation if needed. Now, given all this, if you're currently carrying a variable rate mortgage, you're probably asking yourself whether now is a good time to switch to a fixed rate mortgage. And the answer to that question right now, in my opinion, it will probably make more sense to hold or to get a variable rate mortgage if you haven't already. Now, my reason being is that fixed rates are currently not as low as they were, say, a year ago. Variable rates, on the other hand, have actually just started to increase. Now, at the time of this recording, the average 5-year fixed rate offered by the banks is between 3.1 and 3.3%, while the average variable rate offered varies. Get it? The variable rate varies? Okay. While the variable rate offered by banks vary between 1.8 and 2.2%. Now, if you were fortunate enough to get a variable rate locked in before the interest rate increase, you probably got a rate even lower than this. Now, even though there are several interest rate increases anticipated over the next few months, there is an overall sentiment that the rate increase will not be as aggressive, so you will not see a steep increase of, say, 80 points, for example. Now, this means that it will take some time before the value of your variable rate surpasses the value of the current fixed rate. So if you take the worst case scenario of 2.2% variable rate, for example, we expect that there will be some time before this matches the fixed rate of 3.3%. Also, when you take into account the fact that the Bank of Canada has historically not fully met their interest rate hike goals, it's something to take comfort in with regards to keeping your variable rate below the fixed rate. And this will result in savings along the way, unless you're someone that just wants peace of mind and usually freaks out at every slight variable rate increase. Then in this case, you're probably better off with a fixed rate. But it really is up to you and what you're willing to tolerate. Now, I would like to once again reiterate, And I'm going to say it again, I'd like to reiterate that these are my thoughts and opinions and not recommendations. Once again, I'm not a mortgage advisor, so please do not consider this as mortgage advice. Always consult with your mortgage professional before making any decisions regarding your mortgage. Now, with that said, thanks for watching. I hope you learned something new and received some info to consider when looking at variable and fixed mortgages in this interest rate climate. If you did like the info in this video, please drop a like down below, as it does help out the channel. And with that said, I'll catch you in the next video. Peace.